Hey everyone in Discord, if you're just joining us, feel free to drop any questions or anything in the chat in community stage or YouTube. I'll have both of them up, but we're going to start with the ones that we had written in from people in the premium section. So the first thing is, if you're just watching this, just finding this, this is the strat. Check out, all the other videos we have. We're going to talk a lot about the concepts here, but if you know nothing, you should go and check out our materials we have. And if you go in the description, if you go to stratalerts.ai, you can go here. And if you click start here, your name and your email, we have a newsletter that sends out frequently. We also have free resources and stuff on our blog here. So the first question here is from, one sec, let me disable streamer mode. From Butler, he says he wants to be a swing trader, doesn't want to be glued to the screens all day, and has a schedule that allows if needed, but that's not what he wants most days. Okay, cool. So struggling with using the scanner to find daily, weekly setups with a higher probability of hitting targets. Well, the first thing is if you're a day trader, you can use daily setups to trigger higher time frame signals, but we want higher time frame setups. So we need to start there, which we'll discuss. I do a poor job of staying in winners because I sell when ATTO happens. We can fix that too. Entries. I recently asked you about entries for algo alerts that gap, and you answered it on Discord, and that made sense, but I'm still struggling with those. And then the last part, which is, could you walk through an example of how to use what's being called out in the swing and intraday alerts channel to make decisions? Sure. So the first thing is you have to start really simple, right? If you don't know yet what you're doing, you're not good at it, you need to start simple, and you need to start, before I keep going, we get the camera going, forgot to do that. Ooh, it's bright. But you need to start really simple because you already don't have a system, and you need to start small. Most people are like, I have 20 grand, I'm gonna trade with that. It's like, no, you're gonna lose fast as you're learning. So when you are learning, you want to lose as much as possible, as fast as possible, as small as possible, because that's where you're going to get the chart time and just the muscle that you don't have yet. So the first thing is scanner, trying to find setups. Every setup, if it's a 2-2 reversal or inside bar break, you have about 50% chance of hitting target. So that's where we should start from. Right? It's like, we know half the time this will work, half the time it won't. Now, if we know that, when you go in, you take one and it doesn't work, you can't let that change how you view it. You can't be like, oh, now this doesn't work. Even though I know it works about half the time, and we have data going back 5 years, 7 years, proving that's like 55%. So we know this works. So you can't let that change you, first off. And if you take one loss and you're like, oh no, the sky's falling, you're sizing too big. So what we should be doing is, let's say you have $20,000, right? Or even if you have $500, start using like $100, not in one trade, just overall. You can trade fractional shares on most platforms, Webull, Robinhood. I'm not sure about Thinkorswim specifically. But since you can trade fractional shares, if you start with $500, you could take 30 trades, or let's say 50 trades, putting $10 in each trade. You don't need a lot, right? What matters is, do you work the muscle? So just for an example, you have the scanner and you're trying to find trades that hit targets. Well, we already built something that helps do this really easily. And we actually just had a Twitter post about it. So we'll just go look at those today. And we'll show you how in one day, if we go to my Twitter here. So in StratAlerts here, you're going to see these are just 2-2 reversals and inside bar setups. So pick one, right? Either you're trading 2-2s or you're trading inside bars. Ideally, you just start with one because, again, we need to make it simple, something you can get in and like in your sleep. You can be like, inside bar break, I'm long, right? 2-2 reversal, I'm long, or I'm short. My stop's here, my target's here. You just need to get in there and start doing that, right? Use small size, ideally using shares or fractional shares, or just trade one option contract. You don't need a lot. So let's just dive in and look at these today. So the first thing is, how does the algo work, right? Or in general. Is you don't have to have the algo to make this work. You simply have to know what the algo is doing that makes it work. Well, the algo is trading 2-2 reversals and inside bars. What it does is it enters and it looks like this. on the first entry. And you're going to look at this and you'll be like, well, you know, if I lose $1 or win $1, it's like 50-50. It's a coin flip. True, right? When it comes to entries, 50-50 is fine. What matters once you get an entry is, does it work or not? Because if it works, you can hold it, right? And this could turn into a trade that looks like this because it didn't reverse. It's still going. And if it doesn't work, you cut it and get out right away. So Tesla, right? This is an example that we can talk about today. We can say it broke. We're still long, and we're just waiting. This would be swinging off the daily. Now, if we go to Microsoft, you're gonna see it broke. Boom, it hits its target 1. So the initial trade, it looks like this, right? Doesn't quite matter to us. What matters, do we have a stop in there? Then do we have a target? Because once it hits our target, then it's a matter of what do those big time frames look like. In the case of Microsoft, whoever's buying this year is also buying this quarter, this month, this week, today, and right now. So is that something we'd prefer to hold if everyone's buying? Yes. So when we take it, we can hold it, right? You can hold it to the close if you're just a daily guy, because it's just a daily signal. You only get 1 day. And that's going to be a decent trade, right? You risk 2 to make it 8. Not bad. If we go to Google, you'll see if you're a 2-2 guy, didn't trade Microsoft, that's fine. Google right here. You'll see 2 down. Notice it breaks 2 up. We put our stops right here below this bar, or you can do the wide one, right? Like this. Now, in this case, it breaks. When that break occurs, is everyone buying? Yep, everyone's buying. Okay, we're going to hold that one, right? Once it hits its target, what matters is what is those big time frames looking like? Because if we compare it to this here, when this broke, let's just say it broke as a reversal 2-2, the week was still red, right? So it didn't change that. Doesn't mean we have to get out, but we look at that and we're like, we just don't have as much evidence. We want everyone. Or if we go to the year, it's green. The quarter, it's green. The month, it's green, right? We go to the week. This daily signal triggers a weekly signal. So if we're a weekly trader, if we want to swing trade weeklies, this daily gets us into the weekly signal. And see how our stop is the low of the week? Since this occurred on a Monday, what we can do is just put our stop there, right? Let's say we took 2 contracts. Maybe we took 2 shares, right? And this is what? This would be $500 for 2 shares. So let's just say we took half of a share. We had half of a share and we could reduce half of that. Now we have a quarter of a share. But if we reduce, our stops can go lower, because if we go back down to the day, if we catch the algo alert or the 2-2 reversal trade, we go like this. When we reduce, either just at the close or at this new high, we reduce by half. We made $4.43 on each share that we had, or options. This can be leveraged. But when we reduce half, our break even now goes $4 below our entry. It can be here. So now this is what the trade looks like. So as long as this stays going, right, and doesn't reverse the day, we can hold that. We could say, okay, right, we have a weekly signal. So as long as the week doesn't reverse, we can hold that until the week reverses. And this is just showing you how we're creating winning positions with reversals, but we have to know what those big time frames look like. Right, we can go to more just to show you how it's the same thing over and over. As long as we can do this, then we can get into anything we want. We go to communications, XLC. So you'll see this one a little different. It was a 2-2 down. Right now, in this case, it breaks, hits its target, because the magnitude, if you don't know, the magnitude of a 2-2 down, right? We enter at the black line. The target's always the green one. So it already hits its target, right? Was it a big move? Not really. So we didn't even have to take that if we didn't want to. But once it hits that, you can see it goes a little further. Then it starts coming back into where we bought it or sold it short if you're trading shares. When you've done that and it starts coming back, then we just close it out. Like it went, took its target, came back, whatever, get me out of it. So we take the small loss where maybe it's like slightly above the open of the day. Once we've hit target, we get stopped out. So be it. Find me the next signal. Right? And then you go to the next signal. And if we go to here, right, staples and energies. Staples. You can see a shooter down, hits its first target and second and third pivot targets here. And you can see once that's happened, either you're going to start reducing the trade or exiting the trade, or you can just put your stops at the high of the day, and you can say, I'm just going to hold. If it's a swing trade and it's going to keep going, you know, you're good to go. But that's where the big time frames then come in. We go here. You'll see how that daily signal causes a 2-2 quarter. So if the day doesn't reverse, the quarter gets control, and we have a quarterly signal target now here. We go to the month, you'll see it's just continuing. So at this point, right, it's just up to, does it keep going or does it reverse? But the key is just, can we get in a winning trade where we can reduce it? We can either add to it, or we can hold it, or exit it for a win. And then energies was the last one today, and this could be another example of where I just didn't do too much, right? This is where people, they just really struggle. It's like, okay, I took the signal. Let's say you have the wider stop, which would be right down in here, previous day's lows. I took it, didn't go anywhere, and it's flat. You can just get out of it, right? Signals that are going to go, they'll look like Google. It breaks and it's just going. When it comes to like daily signals and whatnot. Now, hopefully that makes sense. It's just being able to trade those reversals to create a position. That's what matters. And if you're looking at this, you know, pretty much every day looks like this in the algo alerts, right? It's the same thing. So when you're using those daily and weekly signals, use it to create a winning position on things that have monthly or quarterly signals. So like, let's just go to, you know, everyone was talking about AMD today. So AMD is a really good example of how investing works with the strat. So in this case, we had an outside quarter, and we like outside bars, especially on big time frames, because it shows aggression. They're willing to sell it down, right? The year was red, everything's red. They make new lows to this stuff. Then they reclaim it, and now they're willing to buy it up too. So they're willing to sell it down, willing to buy it up. This shows aggression from both sellers and buyers. Now, once it closes out and it gets outside of the high of that, it's going to tend to explode and expand, right? Notice the last time we had a 3. We had a 3 right here. You'll see it made new lows by $1, and it made new highs by 35. When it breaks the top of that, it's going to tend to explode, right? 50% from the break to the high. So when we look at 3-2s, we know that's likely to happen if we stay out of it. So for a quarterly guy, how do we play that? Well, we create winning positions. It looks like this. Now you're in, right? And then what do you do? It's like, well, let's say you get this trade and the quarterly works and you're a swing trader, you make 20%. And you're like, okay, I'm good with that. Reduce half and then put your stops at the low of the quarter. And it's like, okay, well, as long as the quarterly doesn't go 2 up, 2 down reversal, I'm in, right? Now, when you have the bigger time frame analysis, you can use a weekly chart, 2-week chart, 3-week chart, 10-day chart, whatever you want to do in order to have signals that last 2 weeks, 10 days, 3 weeks, something that's longer. Because if you're swing trading, you want signals that last more than a day, or else you can't hold overnight with the signal. So for example, right, inside signal AMD on the week, how do we frame the trade? Well, we know with an inside signal, we're going to have our stop near the low of that bar, or you could risk the much wider one, which is what the algo does. So if you want to copy the algo and get that 55, 60% win rate right here, then target one is the green line. And you'll look at this and you're like, it's a small move. And it's like, what matters is, can you create a winning trade, right? If you can take, and this is where you can also use those daily signals to get, you know, a bigger move on it. But if you can take that initial trade, inside week signal up, it hits its target, right? Depending on how you're going to manage risk, you're either in or you're not. If we're reversal against, meaning like if price reverses, we want to get out. If it doesn't reverse, we're going to stay in. It'd be the low of this bar. If we have the ultra wide, you know, algo stop, it would start here and then we'd walk it up like this. Then you'll see last week, once the week closed out, you know, you're almost to break even as far as where you'd want your stop. And then in this case, you know, you get news. If we go to a monthly, is that a 2-2 reversal month? Yes, Alex. Where does my stop? Like, how do I trade it? Well, right here, it breaks. If you're going to do this, the algo guys, right? The algo guys would put their stop here, right? 55% win rate on the monthly. Cool. If you're a monthly guy and you want to keep a tight stop, right here, right? And then where's your first target? Here. It just gapped through it. But you can see how we have this quarterly 3-2 condition. It's like, yeah, it's going up as long as it doesn't reverse. And then you have a monthly signal to go into that. That's how we need to think. So like if we go to Figma today, Figma, we had a lot of people discussing this in the Discord because I was discussing, I was like, Figma is probably going to kill Adobe. Doesn't mean it has to recover right now, but what that tells us is if we're looking at Figma and we're just like, hey, I want to be long Figma because I think eventually it's going to bottom out. We're going to go higher. Well, when should we do that? When continuity changes, right? The quarter goes green, month goes green. Anytime that day is green, that week is green, they're buying it this quarter, this month, this week, today, and right now. So once this goes green, we just have to be able to create a winning position here. Can we make a position where we can put our stop below the quarter open? That's how we need to think. Right now, in this case, there's some news today. And you'll see, this is an example of just a 3. Right, so we have a shooter, and then it ticks down and then it goes 3. So on news, you tend to go 3, which catches people off guard. But when we're looking at it, is there any other ways we could have been in already? Well, let's go to the day. Right here. You'll see Wednesday, they go into new lows, right? That's why the we buy signal shows up, because it made new lows and then it reversed. So if we know we can time a 2-2 reversal off new lows, can we create a winning trade? It'd be here. We'd buy it. If we're an algo guy, right? We have the wider stop, or we have the reversal against right here. And then where's target 1? It's to take this out. And you'll see it goes a little further. So maybe you get a little more off of that, depending on when you exit. But if you bought 5 contracts, then it goes up here and you sell, 2 of them for 100% gain, 3 of them for 100% gain, whatever it is, your stop can be put down here and you can risk the money you took from the market. It's like, I beat you. I don't have to get out. I beat you. I'm going to use your money against you. I'm going to hold that position. And if it starts going up again and the shorts have to buy to cover, you're not going to sell to the shorts so they get a better price to cover at. You're going to let the shorts cover it way up high, because the more winning trades you can be holding on to, like actual winning trades, not paper trades, the more liquidity you remove from the market. So these shorts, when they're covering, right, anyone short in here or the past, couple months, when that news comes out and all the shorts start covering, they're chasing each other to buy it higher. That's what big winning trades look like. But you can see this is how we want to think. And if we're like a 2-day guy, do you see how the 2-day never reversed? And this is why if you're a swinger, you want bigger time frames. You can just get in here as a 2-day guy and be like, yep, 55% win rate would be here to put the stop here. And the target on this, first target's here, second target's here, third target's all the way up here. So you can see we buy signal off of new lows and then you make some money. It's just, can you do it, right? Take the reversal. If it doesn't reverse, don't get out. If it does reverse or it doesn't go anywhere, get out. And where are you going to put your stops? If you do the same thing every day, you make it really simple, it's all going to look the same. So as far as, staying in winners, this is going to answer your question there, because let's see if we can turn this off. The way you do it is if it reverses and you start making money, you can stay in, right? Now there's some discretionary there. Have you hit targets, right? Like once it takes this out, 57 or $60, do you have to stay in? You can take profit, right? You want to take profit when the new highs are met. The same way we buy when new lows are met, we sell when new highs are met, and vice versa. So once those new highs are new lows, or AKA, once your targets are reached for your inside bar or your 2-2 reversal, that's when you want to either defend it, reduce it. Like if you have Figma, for example, and I want to invest in it, reduce it. Like I had 5 contracts. I sold 3 of them for, $1,000 or something. Gain. I can hold the other 2 and not risk my own account. I'm in. So you don't have to do anything. You have to choose what's going to suit your goals best. Now, in the case of you want to make big winning trades, just say if it doesn't reverse, I want to stay in. All right, if it hits target 1, reduce it. If it doesn't reverse, I want to hold the rest at least, or ideally hold the whole thing. And then as far as how to make use of our alerts and whatnot, well, I just showed you how we do that, how we put our stops in place. So if we alert something, for example, QBTS, 2-2 day. Boom. Alex, I know where to put my stop now. Where's your stop go? The low of the day, the low of the previous day, whatever it is. Where's your target? We already know our target's there. Would this have full time frame continuity where the quarter, the year, the week, day, everything's green? If it works, right? If it hits its target, yeah, everyone would be buying. You'll see the quarter's already green. The month was already green since the new month opened. The week was almost green, and the day is green. The 60's green. So right now they're buying. Day and 60 right now they're buying. This quarter they're buying. This month they're buying. It's a buy. And we have our lower low, our buy signal. So that's our we buy setup, 3-2-2. Right? And then you could also trade the other ones. If you like trading 3-2s or whatever it is, we're just telling you, hey, here's the signal, point, shoot. We go to QBTS. Or was it QUBT? Sorry. QUBT. You see exactly how it works, right? You get in. Does it keep going? Yes. Does it keep going? Yes. Does it keep going? Yes. You're still in, right? When it hit first target, did you have to reduce? No, right? We take this trade when it's up 17% in your favor, 14% in your favor in 2 days. You can just go, boom, my stop's break even now. And I can actually bump my stop up to the low of this. So even if you're wrong, it starts coming back. You're fine, right? And then it goes, boom, now your stop's here. Now your stop's here, right? And your stop's always in profit. So even if it does come back, you're not losing money, you're just taking profit. Hopefully that makes sense, right? And that's how pretty much everything's going to work. So if we go Wi-Fi, momentum hammer quarter, you'll look at this. It's like, okay, well, unless I'm a quarterly guy and I'm willing to buy all-time highs, maybe I should wait. What are you going to wait for? A 2-2 day, a 2-2 week, inside day, inside week. Wait for the signal. Now, if you go to Wi-Fi, you'll see it. Can you trade it right off the quarterly break? You can. How do we do it? We just have to manage our risk. Get in there, put a stop in place. Like, okay, I'm willing to hold this unless the day reverses. Let's say it reverses tomorrow. Okay, I make 7% on shares. Perfect. Right? Doesn't matter. But what we'd prefer is always to get that first, right? It goes down and then we buy 2-2 reversal. Goes down, then we go inside bar signal when we're trying to buy. And if you haven't seen this yet, I am going to look at the chat shortly, but I'm just trying to give you as many examples as I can give you pertaining to this. But if you're timing the signal when we buy signal and then we're buying, this is going to help us a lot. You say, I get triangle day out. When we're looking at signals, higher time frame signals, you have to think like this. A higher time frame monthly signal like this or quarterly that we're talking about, during that higher time frame, they're going to have broadening formations where it's going to trigger the month. So let's say this is last month's highs. It'll trigger last month's highs. Then it stops them out. Then we buy inside signal buy. And then it keeps going and we just keep holding, right? And then it reverses. It's like, okay, this is where I'm going to reduce or break even my stop. If it wasn't already break even, it should have been if, we're in this big winning trade, right? And then we just wait. Like you can just, it goes sideways, whatever. I'm not going to do anything. And then boom, another signal coming off of new lows. That's when we start playing, right? We can add back or even get a new position if we close this one out. But the key is understanding if we're trading a monthly signal, we're looking for this on a 4-hour or a daily chart into the month. If we're trading a yearly signal, we're looking for this on the weekly into the year. So if we go to like NVIDIA, you're looking at NVIDIA, it's been an uptrend 1, 2, 3 years, right? So we have a 3-year uptrend at this point. What if we go to a monthly? We're looking for this, of course. Here's your 2-2 reversal. How do you get in? Where's your stop go? You get in here, right? This is for the investors, for the longer term guys. You get in here. Maybe your stop's half the candle. Maybe it's the low of this. Right? We know the StratAlerts.ai would do this for an algo, but we actually would tighten that up. So maybe you do something like this and then it works. And then your stops break even because Alex said, when things work, they tend to keep going. And then it keeps going. And you're like, wow, I can just hold this thing. And it reverses 50% higher. And it's like, okay, it reversed, but do I have to get out? No, my stops, my break even's down here. So I can look to add, I can look to hold it. I can reduce it. You can do whatever you want, right? It just depends on your goal. So if we bought that and we're trying to get into the NVIDIA yearly uptrend, then we could reduce some Or we could just keep our stops, you know, where we have them. You can say, well, what if this goes like this and just keeps going? Then we're already in. Just depends on what you want to do. Now let's take a look at chat here. Yeah, so when signals exhaust, so like let's say we just go to SPY. Wasn't the best. But so for example, when a signal exhausts, that's when stuff changes. So inside 60, signal, boom, right? Instant winning trade. And it's SPY, it's inside day. But it goes, you know, gives you 55 cents. So let's say we're trading this. If we take that trade and it goes here, that signal's done. So at that point, do we have any signals? Well, the day is inside, so it's setting up for tomorrow. Week is inside, month is a 2, the quarter is a 2. We have no signals. So at that point, is it likely to, you know, move aggressively? No, because it has to make new signals. So what's going to happen in this case is they're going to have these lower time frame signals, and it's just a chop shop. It's going doing nothing because we have no signals. There's no yearly, monthly, quarterly, weekly, daily, 60. There's 0 signals total. So it's not going to do anything. But if you have a yearly signal, you have all year. If you have a weekly, you have all week. So when it breaks and the signal's gone and you have no signals, you should just get out, or you can reduce it and put your stop reversal against, because it doesn't have to have a signal to move. It's just more likely with a signal. So you could say, I'm going to just trail my stop up this, then it reverses. It's like, okay, I'm just going to get out. And didn't get much out of it. 42 cents. But this is why we want big signals, because SPY inside day with no higher time frame signals versus if we go to, let's just say APLD. Go to APLD, you know, the 3-2 expansion setup. So if we compare SPY to like trading APLD this quarter during this one, or even the continuation, this is going to be much more likely to move with, you know, the daily signals or dailies being a 2 versus SPY. So like if we just go here, if you are timing the 2-2-day signals, you'll see it takes the quarter up. And then there's so many different signals, right? There's this one, boom, hits its new highs. And there's this one, boom, hits its new highs. Then 2-2 short, boom, get the shorts, new low, 2-2 long, goes into new highs, right? You can trade all this stuff. But the key is understanding that big time frame if it starts kicking in. So in this case, 2-2-day starts really kicking into the upside on the quarter. It's likely to keep going, right? And then more signals, more entries. So we look at this inside day signal, or this 2-2-day signal. You'll see this 2-2-day kicks in, really big move. 2-2-day here, big move. Inside signal here, really big move. Right, and then we had the 2-2 in here. It didn't do too much, but it did hit its target. Risk reward does not matter. What matters is the conditions of the chart. So if you take a signal and you're like, I took this daily signal on APLD, like let's say we're, just for example, let's say we're like this, and we're like, I want to make 1 to, let's say 1 to 10 or something, whatever it is. So I think it's showing 1 to 5. So if we're showing 1 to 5, and it hasn't hit our risk reward, but it goes shooter reversal tomorrow morning after going into new highs, should we be defending that trade? Probably, right? Because risk reward has no bearing on what price is going to do. What matters is, have we made new lows or new highs? And then do we have signals to make it move? So we don't want to focus on risk reward so much. We want to focus on what is our trade plan. If we're buying reversals and holding until they reverse, that's like buy, hold, reversal, reduce, or break even the stop, right? And this is how, once you have this down, it's so simple. There's no guessing. So you don't have to mess around with the risk reward and all that other crap. It's just like, give me the signal, has it reversed yet? And that's all you're doing every day, any time frame. AMD. Yeah, but the thing is a monthly signal. So if you take this, what is it telling you? So the first thing is this: on a short-term basis, and I talked about this in my last video. On a short-term basis, price is going to move +1 or -1, 50-50. It's like a coin flip. So if you go in there and you're just long, short, long, short, long, short, 50-50 is pretty much what you're going to get. Minus fees, which is why that doesn't work. So it's 50-50. Now, on a longer time horizon, it's 50-50, but then once you start adding evidence to that, you start getting more evidence up or down. So what adds evidence? Reversals, right? 3-2 expansions. These things add evidence. What else adds evidence? Any other signals, like continuation signals. What else adds evidence? Long green bars, long red bars. Because it tells you who's more aggressive. So short term, 50-50 up or down. Long term, if they are buying AMD this year, right, which you can see here, since June of 2025, they have been buying AMD. Noted. Now, this year, it's less 50. It's not 50-50 because if they're buying AMD this year and we get new setups in the direction of the yearly guys buying, we now have a yearly signal which causes movement. Doesn't have to be directional, but we're pairing it with a very aggressive buyer who's buying AMD. And the signal creates losing traders. So what we're doing is we're matching up. We have this monthly signal all month. So when it breaks last month's highs, you buy it and you hold all month, as long as it doesn't go here, right? We would say this is valid. It looks something like this. This would be valid all month. And we have the yearly for evidence. So they're buying this year. And we're still expanding that outside quarter from last quarter. So you can see 3-2 quarter, and then it opens and it goes green. What's it trying to do this quarter? Go 2 again. How is that going to happen with a 2-2 where we can cause the movement? Because when you look at any move, it's always going to be caused by inside bars and 2-2 reversals or scenario 3s. But even the 3s are 2-2 reversals on lower time frames. So if you're a monthly guy and you're like, I want to be long AMD this month, then you have to be a monthly guy, right? If you're a daily guy and you're like, I want to day trade AMD this month, you have to be a daily guy. You can't be mad because AMD gapped up if you're a day trader. You just can't, because that's not your plan. So hopefully that makes sense. You need to narrow down your entry timing. Just use the reversals. And you can do it really quickly. So like for those of you that have the scanner, go to app.stratalerts.ai. You're like, Alex, I want to look for reversals, but I only want to do it on the strongest stuff. Okay, here's all your inside bars today. So here's all your daily setups. Now we just go to the year. We go and we say, okay, I want stuff going up this year. Perfect. Right? And then I want to go on the stuff that's up the most. Perfect. Here's all your inside day setups on the strongest things. This is up 400% this year. MP. So if we go in here, we go to MP and it's like, okay, well, did Alex tell me about MP Wednesday night nightly vid for free? We did. So if you're looking at Wednesday night nightly vid, you're already up 10%. This inside signal would be an ad. What would it do? That daily causes a weekly signal. This occurs with everything green. If that works, what would it cause on a month? It would cause an inside month. So this is something I'm definitely watching tomorrow morning. Like you can see how simple it is, right? Signal plus aggressive buyers. How do you find aggressive buyers? Look at the strongest things, right? And then those signals have a higher likelihood, even though they might go up or down 1 in a short term, long term, we know it's going up. So over time, the signals overall will resolve higher, bearish or bullish. You see yesterday I had a shooter signal and it's closing higher. The signal here on the shooter doesn't guarantee it's going down. It just guarantees it is going to move. Now in this case, it was a 1. So it went shooter and then 1, and then the 2 is when it's going to get the move going. But hopefully that makes sense. And just to end off what we were discussing a second ago, when we alert stuff, we're simply alerting you to things that are happening, and you manage the risk based on your preferences and your goals. So if we tell you about XLV quarterly pivot machine gun, inside quarter signal, right? If you're a quarterly guy, how do you play that? Same way you'd play anything else, right? It just looks like that to start, and then maybe it keeps going. And that's it, right? If you're a daily guy, you could be buying here, whole inside day, add inside day. If it breaks down tomorrow, what if this inside day goes 2 down in green? Everything flips back green then. So we could buy more tomorrow if it goes 2 down in green, or if it goes inside down, you could also have profit taking. It should change what's happening. Simply you're confirming what those big time frames are doing, or you're not. So you want to think of it like this. We had a question. It's like, when you're buying a signal, does it have to have higher time frame enforce? Technically, no, right? Because again, the market's likely to go up or down. Like, it's not likely to go up 600 and down 2. Like, you're never going to open the SPY. It's going to go up 100% today and then down 0.25% tomorrow. That's not how the market works. It's more like it's going to go up 10% and then down 7 and then up 10 and then down 7 and then up 40% and then down 20%. Like, it's a trend, right? Now, you do get the really aggressive ones, but that's not my point. My point is, when we're looking at a chart, a daily chart, for example, I don't want to say you're just as likely to go up or down, but when you take a signal that reverses, that signal is like 50-50 if it's going to work or not. But what matters is, if it does work, what does it change? Because when we're trading, what we're simply doing is we're looking for signals, and we're like, okay, if that works, does it change anything? So let me just show you an example of this. Change this to 800. So just for example, right? You can see we have inside signal, shooter signal, inside signal, shooter signal, right? Now the question is, first, where do we time the signals? We want to time them off of new highs, right? We also want to time them off of new lows. You can see in this case, lower highs and new lows. So we instantly know, like, as far as where we're drawing our attention to, this signal's important. When this makes a new low and starts racing back, that's important. This shooter, right, did cause movement, right? It was off a lower high, that's fine. And then this lower low, this is important to us. So we're watching here, we're watching here, and we're watching down here. And you don't have to skip off on lower highs and higher lows with those signals. I'm just trying to make a point. Now, when we take this inside signal, if it works, right, where's it going to go? Well, it made new lows. So if this works, we want to go and take out the new highs, the other side of this range, because we know price will broaden over time, right? And it's going to get bigger like this. This is what it does. And since that happens, we can have 50-50 win rate here, but if it works, we need to be in there, right? If it doesn't work, get out for a small loss. If it works, works. Now you can do this on a monthly chart. We showed you NVIDIA, SMH, semiconductors, SPY monthly. They all did this. Or you can do this on a 15-minute chart. But what matters is, if it works and it goes to the other side of the range, then what? What do the big time frames look like? So if we have this on, let's say, a 60-minute chart, when it gets to the highs here, let's say the month started like this. So we start the month and we're inside. If it breaks last month's highs, we now have a new monthly signal that's going. Right? We have the signal here, and then it broke the highs. This lower low plus the signal, we could say if this is last month's highs, this signal, if it's successful, will take last month's highs. So we can use this signal to cause the month, right? And this is how you're going to manage your risk to smaller timeframes if you know what you're trying to buy via the higher timeframe signals. And then if the month is already going, let's say we're already above last month's highs, then we're looking for the same thing. We're like, okay, here's another inside signal after new lows. Let's say this is on a daily chart, or 4-hour chart, whatever it is. Well, if this works on a 4-hour, the month is still going up, and we still have all of this target to go after. What matters is, can we time this signal and have, 50% win rate when we get in? Because when we're right, we're really right, and it goes to the other side of this monthly range. It takes our monthly target. So to really nail this home, let me show you. I should have pulled this up first. So this is what it looks like. So you have a monthly signal, shooter. How do you get into that? 4-hour signal. It's the same thing, right? It's fractal, top of the range, new highs, and then the signal in the month. 4-hour goes into new highs, then its signal breaks on the 4-hour to go to the lower lows. If that 4-hour works, right, and this is last month's lows, we just triggered the monthly participants with a 4-hour signal. So we're using the little guys to punch up at the big guys and try and trigger the big guys to do something. So when you're looking at this monthly signal within this bar to make this lower high on the month is a slight higher high in a lower time frame, like a 4-hour. And then if it gets out of that and it just keeps going two, we know the rest of the target is to go through all this stuff. So for a monthly signal, that's really going to work. Like this one, you're going to have the broadening formation, expands, then it goes sideways, right? And this is, you're going to see, I lose some money. Alex, I took the short and then it triangled me out. The goal is not to never get stopped out. The goal is, when you get stopped out, do you know that you can get back in? Because could you have taken this trade here to start the month? Yeah, short, boom. Maybe a 10 contract short. You make 70%, perfect, goes inside reversal. Get rid of half of those. Because if you get rid of half, your stop can now be up here. Right, and then they go up. You'll see lower highs, higher lows. I'd prefer not to trade that. And then reversal here, you still have the winning trade from before. Maybe even you got out of the full winning trade. Just depends on where your stops are going, right? But now you can get back in. Boom, another winning trade. That works. Keeps going. I'm still holding. Keeps going. I'm still holding. Trails the stop down to here. Right? And let's just say you get stopped out right here. That's fine. Right? Let's say we had minus 10 contracts. We can go plus 5 and we still have minus 5 contracts from the same price short. But now we have a lot of cushion because our break-even stop would be, way up here. And then when it makes the new high and we have another signal, we can just get back in short, right? You take 5 contracts, make some, takes you out. 10 contracts, you make a ton, gets you out of half of those. Take another 10 contracts, make a little, gets you out. Reversal, take another 10 contracts, makes a ton, and now you're just obliterating the market. Hopefully this makes sense. This is how you want to think, right? We can use it to set up signals. We can use it to trigger signals. We can use it to confirm signals that are already going. SO. SO is a good example, right? And you're just going to see this in everything. And the indicator makes it easier, but you can see, right? New lows, inside signal to cause movement, and then it goes gap down buy. Boom. Make some money, reversal, get out. You took your win. New lows, inside signal, gap down buy, boom. And then another gap down buy, it keeps going. But you can make the money here, right? If you can just get this and get this, you don't even have to worry about the rest. That's what's going to allow you to get in there. And even if you're wrong, right? If we just go to like a downtrend, you can see like maybe you're trying to do something to a bigger time frame, but the month is red, the week is red. It's like, well, if all those time frames are red, you can see inside signal, it goes gap up, sell, so it didn't work. And then inside signal, it's a short, you would have made your money back because you were wrong, and then you just make it back. Let's just say here, inside signal, this was gap down buy. The magnitude of a gap down buy is just go outside day, so it hit its target, and then it came all the way back. So you're just going to take the loss, so be it. Right, and then inside bar, gap up, sell. So you can see all these inside bars, they're just gapping up and selling it, right, this whole time because all these big time frames are red. Then you can see as we get down in here, hammer, 2-2 reversal, reverses, gets you out, so be it. Hammer, 2-2 reversal, boom, in, new target, met. You see it makes the new high after making the new low. So hammer takes out its target. Then it goes 2 down in green. They're still going green, 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 right? What matters is not can you get in here and be the perfect little Miss Perfect trader and go like this and perfectly sell the high? What matters is, can you just time this? Can you just time this entry to target this little win? And then if you reduce it, you can hold it. If you break even your stops where you bought it, you can hold it. Can you just time the little win? If you're trying to day trade futures, so the thing is day trading is not separate from, and let me just turn this off so it's less ugly here. But day trading is not separate from higher time frames. Your higher time frames tell you, is it going to be good to day trade or bad? So like if we go SPX, we go to a yearly, and we'll just go back really far just to show you, just make a point. In a year, SPX is moving up or down 40%, right? This year moved 5%. See how it's an inside year? Do you think the day trading will be better during this year, which was down, you know, it closed down 2.5%? Or do you think it would be better if you waited and this year was up 20%, you still had half the year left, and you started day trading that the rest of the year? You'd be better off trading this and getting it late than rushing in there in an inside year and just getting killed. So when you're day trading, what matters is big time frames, because that's how you time the big moves on low time frames. So if we go and just look at this. So if we're going to be a day trader, we want to be aware of what the big time frame looks like. So in this case, right, SPY's a buy. We know that. And if we just look at the year, quarter, month. So what are we going to do? Every time the 4 hour ticks down, we're just going to buy it, because the year, quarter, month, they're buying as far as we know. Or you could use the parabolic star, whatever you want. But if you're a day trader, you're going to prefer to make new lows and then trade back in that bigger direction. So if we get this signal, new lows, we know it's going to new highs to take this out. So we want to day trade in that direction, right? So if we go down, let's just go down to like a 15 minute. If we go down to a 15 minute, you're going to see there's a lot of false signals. Why is that? It's because when you go to lower time frames, you're trading against, right? We look at this, you'll see the day is bright red and we're trying to buy it on a 15-minute basis. It's going to be difficult to do because they're selling today. So what we want to do, ideally use like the 30 and the 60 and time the same signals where it makes the new low, and then we want to try and get them going the other way, right? Intraday and makes the new low, and then see, right? If you're trying to buy this all morning on a 15 basis, it makes the low inside 60 signal and then it moves. So for day trading, we want to time the big time frame so we know we have the evidence in our favor. And then we want those low time frames, like a 60-minute, 4 hour, a daily, to get a signal so we can trade it. Right? And you can see in here, new lows, reversal on the 60-minute, that's something we like to trade. And you can trade in that direction all day. As long as that doesn't reverse, you have that going for you. And you're going to see pretty much all day they're making higher lows. So if we're framing our trades properly, this 60 reversal, as long as we know that's happening, that's where we can go down to like a 3-minute, a 5-minute, and try and time even better entries into it. I'm not sure exactly. Yeah, it's right over here. So we already know what the 60 looks like. We know it's going up on that daily broadening formation. We know all that stuff. Then we can time it in here and hold all day, because we have that signal on the 60 and we have everything coming back on those bigger time frames. And we can time this signal down in here. We can try and time these signals, right? You can do this all day, but you have to start at big time frames first, or else you're not going to get the big trend. Because you're for trading stuff like if we look at Boeing, Doji, right? Doji goes green, then red, then green. Imagine you're trading this, but let's say this is the daily chart. The day trading in here is going to be really whippy, right? And some people like that. They'll trade long and short and long and short, and they'll do that. Have fun. But we prefer to make positions into things where we can hold, because you can take your day trades and be like, well, you know, I killed it today. I took 5 winning trades and I added to them and they're just going. Let me just reduce 70% of it, and then I can just let it go, right? I'm trading stuff that should keep going. So I took a big trade, it worked, it's going, maybe it keeps going. Just risk some of my gains. And hopefully that makes sense. When to hold your trade till it reverses against you versus taking profit when hitting magnitude. You do both, right? And that's because you have to know what you're doing. If you are taking daily signals to daily magnitude on things that are going to keep going on the month, quarter, and year signals, reduce, break even the stop, let it go. The goal isn't to take it, like everyone thinks the goal is, I need this system that wins 100% of the time. I never want to be wrong. I just want to be only right. And that I'm looking for that system, right? That's what everyone wants. But you can't do that because you can't be right 100% of the time. Even if you're right 100% of the time, let's say you're right 99.5% of the time. Over the course of a year, you take 300 trades, you're going to have 3 losing trades. And if you're right that often, you're going to start sizing up, sizing up, sizing up. You take 1 loss and you lose everything. So it's just not a good way to look at it. You have to look at it like, can I create a winning position half the time or more? That's what I need to do. And then can I do that on things that have higher time frame signals? Like, let me just show you SPY. Right? It's like inside year SPY. Okay, this year SPY to the upside, I know it's a buy. How many daily signals can we take to just create winning trades in there? Like, what happens? New low, buy. New low, buy. Right? Did you have to buy this perfect one and hold it and then quadruple your position size here? No. You just had to be right once, reduce it by half so you can put your stop here. And now you don't have to trade the rest of the year. You know, if you have a lot of money, right? And you're like, I just really want to invest in SPY this year because it's got the yearly signal and it's SPY, it just goes up. You take one signal, you're like, okay, done. You walk away. You just put your stops and you walk away. Right? And then the way you it's like, well, I can't walk away and then come back 60 years later, right? This company might not exist. Absolutely true. Trail it on the time frames you're trying to trade. So if you're a yearly guy, you'd be watching the year, the month, and quarter. So if we take that signal, or let's say we take this signal, it's gonna be the same stuff. It's its target. You just have to get this part and then reduce or put your stop break even. And it keeps going until it reverses here up like $15. Cool. And then maybe you reduce again or whatever you're doing, right? But once you can get that, now you go to the month. It's like, okay, I'll just trail this up the month. And then it takes you out. Okay, that's fine. Then you just look for more daily setups. If you're a quarterly guy, it's a 3-2 quarter. Is that something we discuss? Yep. 2, 2, 2, 2, shooter quarter, outside bar. Now we know the broadening formation's on, right? And then ticks down, goes back through. So the volatility, you can see it increased after the 3. So you just have to choose. Do you think it doesn't make sense? No, you can trade Forex. Let me see. I don't have my thinkorswim up. Go to the Euro USD on the year. So the year was a 2 down and green to start the year. So notice they go into new lows. We go to the quarter, we buy setup. So what do? Buy it. Right here. Now you're a Forex trader. You see how it's the same thing? Right? You just have to know this part. And then when you go down to a daily, whatever you're doing, if you know that quarterly is setting up, you can trade this, right? And if you're trading not just like those big quarterlies, but you go to the month, inside month signal here, you just have to be able to get this part, right? And we have little targets here, but notice it just keeps going. So it's going to work the same way. And if we turn on the sell signals, you'll see, since it's been going, it was going sideways for a while. You can do this both ways perfectly fine. right? Signal, target gets hit, nice. Signal hits its initial targets, perfect. Then stuck in the middle, reversal down, and then reversal up. And then notice, see how it's higher, low, higher, low, higher, low. Just takes a while, but then hits its target. Reversal down, short, perfect. Inside just continues. Inside reverses, reversal long buy. Inside continues. Right, and then it did take out last month's lows this month. It just hasn't, it's been green all month. Replay mode, oh, my bad. A series of candles. What do you mean by a series of candles? And then we had one more question from Premium here. It's when you call out swings, how do you gauge how far out to go? And again, just depends on your time horizon, right? I don't have stats on my personal average holding period. But it depends on what you're doing, right? So like our trading algorithm, the average hold time is about 5 days for a winning trade. For a losing trade, it's like 3 or something. The high, red line, and green. So all this indicator is doing is this. It's showing higher highs and lower lows. So a higher high is greater than a lower high. Lower low is less than a higher low. Or you could say a higher high is greater than a higher high, or a lower low is lower than a lower low. So when we look at this, this would be a lower high because it's lower than the previous high here. This is a higher low because it's higher than the previous low here. So you can see, like, if we just go back in here, see how that lower high is lower than this higher high, lower than this lower high? Now you can see in this case, this makes lower lows to this higher low, so that's a lower low. It's not complex. And in reality, you don't even need this. All you have to know is that when you're taking signals, we want to take them to reclaim previous highs and previous lows, right? So when we look at, if we look at this signal, this one inside bar, 2 up, 2 down reversal, it's reclaiming this high, right? It's built in to what we're doing. So if we go to what we're doing, here's all the signals you're going to want to do, right? You'll see it's built in. So if we look at a 2-2 reversal, 2 up, 2 down, this is reclaiming this bar's high. So see how it reclaims the high of that? That's why it works. So you can take the signal as is, because you're reclaiming that, or you can time it where that signal occurs and we're reclaiming this low and we're reclaiming this low, which is what we like to do. But you can see, right? We have inside signal here. When that breaks, if we look left, see how that breaks? We have the lows over here. We want to take that because we're coming back above those lows. Stocks gap. Yep. That's why we manage positions. If you reduce it and it gaps against you and erases the whole previous day, you still are at a gain because you reduced it. You haven't noticed. So the whole goal is just create a winning trade, reduce it, and then you can do whatever you want. Create a winning trade, put it at break even, do whatever you want. Your goal is to have a break even stop as far away from the current price as you possibly can. Utu. Yeah, good example. So new lows inside day. Notice, right? If that breaks, see how it reclaimed the lows on the left? That's all that matters. Now, if we go to the month, oops, still in this replay. Now, if we go to the month, it is a reversal down this month. So we'd say if that doesn't, oops. So you can see we're in replay mode. I thought we were in real time. But you can see, right? This signal set up. And then it goes, right? Hits its first target. That's all that matters to us. It doesn't have to go all the way up here. We just have to make the winning trade. So in this case, it gaps slightly above the signal break, but it does retest it. So you're able to do this. Just get that, right? And then you can do whatever you want. If you reduce it by half and you just keep your stop where you had it, it comes back, stops you out, you still make money, move on to the next. And you see inside signal, gap up, sell. It's one of my favorites. Meta, perfect. New lows to this low. We haven't made these higher highs recently, but the previous highs here. So you could draw it like that. You could draw it like this. Doesn't matter, right? All that matters is notice we're at a lower low. And we have the signal above this, 716.64. If it works, it's going here, 730.91. If it works, the week is green. What's the week at? The week's at lower lows, and it's green, so they're buying now. If it works, would the month go green? Maybe. If it works, what's the quarter look like? Well, let's see. So you can see this in this case, it took last quarter's lows, but we're not below it. So if this works, it would try and counter that signal on the quarter, right? Which maybe we'd go back to these highs. So you can see how that daily signal is reclaiming the last quarter's lows. So all that matters with your signals is, are you reclaiming something? With options, it's the same thing. Both options, since they go to zero, you lose 66% of the time statistically. You have to aggressively defend, which means if you're playing a 0 DTE and it expires in 2 hours, you better be getting out of that the second your signal's done, the second you go into new highs. Or you better aggressively trail that stop up. Like you can use let's just go to SPY on the last day that we had a decent moves. Let's say we're trading SPY the other day. There wasn't much at the close. Just to give you an example of like really short-term stuff. I'm going to turn this indicator off. But we know we want to time signals back through a range, right? When we look at this, did it make new highs to this? No. Doesn't matter to us. What matters is, are we going back through a range? It's like, well, if this signal 2 up, 2 down works, right, and we're just picking up a random one, right? But if this works, we'd reclaim this high, we'd reclaim this high, we'd reclaim this high, reclaim this. It's like, okay, so I can take that. Now, if I'm playing 0 DTE, I have to manage that risk, right? I'm not going to go in there with 5% of my account, because if it expires, I lose 5% of my account. We'd never do that. What you do is you'd be like, okay, well, I'm going to put in 0.25% of my account. If I'm wrong, that's how much I lose, because it's 0 DTE. It's like, let's say it looks like this. We're getting in here. Once it starts going in our favor and it hits these new lows, aggressively, we're going to defend this. So we can do our trailing stop like this, right? Whatever it is. We can just move our stops against these highs, then move them against these highs. And once it reverses here, move them against these highs and walk it down. We just have to move it towards price. Now with 0 DTEs, we'd prefer to reduce first and then continue to trail. But it's going to work the same way. It's just with options, you have to manage the risk. They go to zero. This would be a much better example of the setup though. See reversal, starts going, hits the first target. Now we have to reduce. since we're playing 0 DTE. Because when it comes all the way back up here and you're trading 0 DTE, this is like a 50% loss, 30%, whatever it is. APLD, it just broke the signal right at the open. Below is good for you. Beautiful. 2 down, 2 up signal, right? All he has to do is time this little bit, right? Just getting through these first targets, but it works. And since he took it after we've reclaimed these lows here, and you'll see, right, that the inside signal, then the hammer signal, we can take both of these, right? Both of them hit their targets. But in this case, it keeps going, continues into the next pivot, and then potentially the rest of them. And you'll see how Twilio on the week. This is a weekly signal, 2 down, 2 up week. So you can see, if we frame it off the weekly basis, it would look something like this. And if you're like a day trader or something, you can go down to a lower time frame. You say, this is a 4-hour reversal. You can now frame it as a day trade or intraday, something like this, right? So you can get into that sooner. Maybe you can even tighten your stop up quicker. AAOI, yeah, very nice one. Now we can see, why did it work? Monthly reversal occurred here. It still hadn't hit its target, so we still know it's trying to take that out, given it doesn't reverse last month's lows. The week, inside week, does that cause movement? It does. Break here, stop here, or stop here, or stop here, right? Doesn't matter. Targeting that monthly target keeps going. And if you go to a lower time frame, how do you time the buy? Right? Not always going to get it, but it looks like that. Once we've already done those big time frames, we know during the day, once it makes this low and comes back, that's where we want it. Boom. Right? And then the rest of the day, slight win, slight loss, or actually, nope, it'd be slight win, never reversed here. It goes up. Simultaneous break. Ideally, you just hold it until it reverses. When you have a simultaneous break, you have more evidence to say price should just keep going. Now, if you're trading during an inside day, nothing's going to help you, right? So if you're trading during an inside day and it breaks and it's still very much an inside day, it's probably not going to do as much. But if you're trading a simultaneous break like last week, in here, this goes 60 reversal at the beginning of the quarter. That's when simultaneous breaks occur. Beginning of the week, beginning of the quarter, beginning of the month, beginning of the year. So when this breaks at the beginning of the quarter, you can see day 1 of the quarter. What does it do? That break causes us to go scenario 2 up day above 6679. That break causes us to become a 2 up week last week. You can see above last week's highs. And it also caused us to become a 2 on the month. So that break wasn't into a scenario 1 that's doing nothing. It's into a ton of 2s to the upside now. And sorry for those of you guys in Discord, I have been looking at the YouTube. The condition's more important than the colors when you're looking at a setup sheet or the signals. Now, these are examples of exactly what we want to see. So like for a 2-on-2 reversal, we want long green bar, inside bar, long red bar. Because the longer these bars are, the greener and redder they are, the more likely they are to move up or down. So we're good. The problem people run into is if you're doing a strategy like ours and you're trading something that's doing nothing. If it's up 5% this year and it's the 10th month of the year, good luck. It's doing nothing. When you're timing signals, new lows and new highs, it's both. You can use just the previous bar, or you can use previous swings, highs, swing lows. The key is that you're doing it. Your stop can be whatever you want. For our algorithm, we do a stop reversal against. For my personal trading, I normally use a reversal against. So like, what would that look like? You know, everyone wants to talk about whatever. So if I enter this eBay, right, still going. Higher low, higher low. I'm just walking my stops up here. Right, if I enter the daily signal. You enter AMD monthly, you enter, walk your stops up. You still haven't had to move it yet. Right? Let me show you the example of the last AMD signal we called out on the month. Just here. It breaks. Walk your stop up, walk your stop up, walk your stop up. That's it. Path. Doing nothing. Doji, doji, meh, meh, doji. Next year, it might do more. I'm not going to say it can't move. I'm just saying, like, it's not doing much. Do we have any recent like, gaps or something? Have people talking about it. We did have a recent gap. At best, you could look at it like a 6-month chart and say above that, 1538. For those of you guys asking for the indicator, I haven't finished it yet, so it is private. All it is lower lows and higher highs, and you can turn it on or off. So if you just go use Lux Algo's swing high, swing lows indicator, you can get the same thing. Best way to find volatile stocks, scanners. So if we go to our stocks, we can go here, and you'll see I have ATR percent, ATR dollar sign. So we can go and we can look for our setup. Let's say we look for inside bars. So that's our setup. Now we can go the highest ATR. These are volatile. The highest ATR percent. These are going to be the ones that move, even if they're not very high dollar names. So if you're a small account guy, you can trade this type of stuff. Now this one is still sideways. You'll see we have the inside weak signals, so maybe that can get it moving. But if we go like QUBT, this name, it's only a $22 stock, but it moves on average every day 10%. That's something you look to trade. Is once you get those lower lows and higher highs, things start kicking into gear and moving around. Right? You see they make those daily lower lows and then boom. Then they make the new highs and then gap down. They take their profit. See RGTI, same stuff. You can see we want this, we want it really big gain, then our signals. You can take signals to cause big gains, or you can go after big gainers with signals. AMD, big gain signal. Nvidia, big gain 2-year rally signal. Go to Costco, right? Goes up and then signal, goes up, signal, goes up, signal, signal, goes up, right? That's how we want to think. Because if we're going after things that are going, it's more likely they keep going. A checklist going into the trade is, what is the next scenario, 2 up or down? What will it create negator do? So you'll have 4 time frames up. And you'll say, well, this is 6, my bad. Let me turn all these. This is why I don't like indicators. It's really ugly. Like let's say we go to go Figma. You're gonna choose whatever time frame you're trading, right? But we'll use the day, the week, the month, and I'll put like the 4 hour or something. So when we look at anything, if we're looking at the 4 time frames, it's going to give us a good idea of what's going on. So Figma this month, what's the signal? Well, it's not a signal. It's 2 down in green though. So it looks like this. It's trying to go to last month's highs. 4 hour, right? A little different. Made new highs. Maybe it's reversing back in. The week. You see the weekly signal is what made that monthly 2 going 3, right? Which was not a signal. This weekly reversal made it move going into its target. And it's pretty small targets, but you can see it made it move. And if you look at the day, the shooter day signal made it move and hit the weekly target. It's rejection of that signal. So when we're looking at it, we ask ourselves, or if we could zoom back in, when this goes 2-2 day on Thursday, if that works, does that set up a weekly reversal? If that works, what color's the month? Does it set up monthly signals? Does it trigger monthly signals? Right? So whenever we take this daily, we look at the week and month. You can throw the quarter on there. And we're like, what is it doing to the bigger time frames? That's what matters to us. So when you want to speak it out loud when you're looking at this stuff. You want to say, okay, if this daily reversal occurs and it goes to its daily target, which looks like this. So if we take out 54.46, right? The week would be green because Monday's open was here. So if we take that out, the week turns green. That sets up a weekly signal from red week to green week. Okay, if that works, when does the week close? Well, Friday. So Friday they buy it, does come back in, but they did buy it Friday. Then we go to the month. Is the month still green? It is. So the month goes green, daily signal, that works, creates a weekly signal. Well, for the new week, if the week's green, it's trying to trigger the weekly signal. The month is already green. The quarter is green. So it's a matter of then, can you time a setup into it? And in this case, we had news today, right? I wasn't trading much today. But you're asking yourself, if the signal hits its target, then what? So let's go to Tesla. So I actually did take Tesla today off the signal. This is coming from our, oops, where is it? Right here. So this signal on Tesla is coming from our algo, right? 322 signal. Notice it tells me the month is already going up. The quarter is already going up. The week is a 1. So if this works, my question is, will the week go up? Well, the week is a 1, right? Anyone that sold last week, they're underwater. We're above last week's close at this point and open, and they're underwater for now. We want to take last week's highs because anyone short there, if we take out those highs, then those shorts have to get out. If this 2-2 day works, it's going to take last week's highs. Okay. So this daily signal will trigger last week's shorts to get out and buy. The month, is it going up this month? It's going up this month. The quarter, is it going up this quarter? Yes. And we still have a target on the quarter to take this stuff out. So we already have the quarterly signal that we alerted on, and we just get a daily signal in the direction of that quarter with everything green. You can see it. Day, week, month, quarter, everything green. It's what we want. Indicator profit of the move. If you're just hopping in, it's this stuff. It's this strat. So it'll tell us how far it's likely to go. So in the case of Tesla, the 1-2-2 reversal looks like an inside bar followed by a 2 down, 2 up reversal. A 2 down, 2 up looks like this. 2 down, 2 up. We just have an inside bar in front of it. So we look at Tesla quarter. 1, 2 down, up, or 2 down, 2 up reversal. We know it's trying to take that out, all-time highs. So if we know that, then any daily signals in that direction confirm that's happening. So we go to Tesla way down in here. Oops. Go to a 4-hour. Every 4-hour signal, we can just take it, right? Not every single one's going to work, but take it, make some money, and then you can hold it. You can reduce it, add to it, close it out, look for a new signal. Doesn't matter. Two down and a two up. Confusing. App did that too on the week. Yeah, do you see it? App shooter week. What would that create negator do? Well, it creates a winning trade here for us. But what does it create on bigger time frames? Well, the month inside, but it's red. The quarter inside, but it's red. So this week is not going to trigger anything. You know, at best, if you take last month's lows, you got a lot of distance to do that. But you can see, you just find the signal, trade them. 2-2, up or down, inside, up or down. Some people like really specific signals like rev strats, which are really fun. It's like Figma. One strategy that a lot of people have been doing as of late is they're going to look for inside bars, and then they're only going to trade the 1-bar rev strat, which looks like this. And you can do this on any stocks you want. But the 1-bar rev strat, you get an inside bar, ideally it gaps down and you buy it. You get an inside bar, ideally it gaps up and you sell it. And people will do this, just that, and that's it. It doesn't have to gap down or gap up, but it's just preferred. So many setups, how do you catch them? Well, that's why we built the algo, because it just tells us. And we're moving it to real-time trading. We're working on that right now. We've been forward testing it, and we've obviously shared it as a product that we have at stratalerts.ai. And what you're looking at here, this is the one built into the scanner. All of these signals are also available via email for a cheaper price without having the additional information and additional sector statistics. So we're looking at the daily signals, right? We look at the sectors and see how much evidence we have. But you literally just go in, buy or sell. Ideally, you use a professional trading platform, which will get you in positions faster and out faster. But you just buy the algo. To have it trade for you right now, it's not available. In the beginning of next year, like Q1, Q2 of 2026, we do plan on having algo trading completely available. I've been kind of slouching or laying back. But take a signal on the 15. Do you have to walk it on the 15? No. Well, let's just give you an example. So instead of using 15, let's just say we're a 60 guy. If I take app 60 short, notice the 60 reversal confirms the weekly. So again, we already have this weekly with the target, everything. And then we're using a lower time frame to go in here with the target and everything, and it's just no guessing. So the 60 targets to take this out, but if it works, weekly target. How do we know if it's going to work? Has it reversed? we have weekly signal, 60 signal, 2, 2. It worked. Hit its target, never reversed. Do I have to get out of this if it goes inside up tomorrow on the 60 minute? No. I can just reduce half of it and I can put my break even stop or in profit stop at the weekly open. And now I'm in for the rest of the week. You don't have to do anything. You just have to not hold losers. The only thing you can't do is hold losers. If you're winning, do whatever you'd like. I'm not sure Sarah's live stream was music. I think maybe Sarah hopped off and the stream was still going and it was just like elevator music. I'm not certain what was going on, but if you have a problem with the stream, just drop it in chat. Normally, if you restart your Discord, your computer, your YouTube, whatever you're watching, it'll fix it. As far as other option strategies beyond buying puts and calls, yeah, you can do whatever you want. You just have to realize if you know price is likely to go up or down, you can buy calls. You can also sell puts, right? If you know the SPY is going up because it's like, let's say SPY hammer month. If you want to sell puts on SPY, you can, right? You can even sell in the money puts if you want, if you're really confident, which we were really confident. We put it on YouTube and we're like, the market's about to bottom, get ready. Boom, right? So you can do whatever you want. Most people just like buying options, which is why that's what we talk about. But what you could do is you can like leg into spreads and positions like that. So like, let's say SPY hammer month. If we know we have a lot of evidence, which we did, you can sell the puts to buy the calls and go really leveraged on that, right? It's one way to do it. You can sell bearish pulls or put spreads. You can buy bullish call spreads way out of the money that have like crazy risk rewards. Do whatever you want. Is the D only scanner? No, so we can scan the 15-minute through the year. You can have a watch list. We are adding watch list functionality. It's just we're kind of holding things off for version 2. We have a lot of updates to add. And we have been focusing on the algo recently. The algo just works off the daily right now. So it's better for shorter term not day trading, but like shorter term, like 3 to 5 day swings. As far as your scanner though, you can, like, if you want to just watch like Meta, Microsoft, Apple, Google, Tesla, Adobe, Figma, the Quantums, QBTS, like you can just go like this and now you're only within your watch list. Like so. Oh, so the daily only scanner. Are you talking about the light version of the scanner? Not many people use it. If you are the light version, yeah. So on the light version, so you just don't have the intraday, but I believe you have the day, week, month, quarter, year, right? So the thing with the light version is you can't scan in force. But what you can do is you can scan. So like we go inside day. We left a lot of the functionality there, so you can use it. It just doesn't have all the crazy doohickeys that we have. But you can scan those inside days. Let's say you filter them for a higher average true range or something. You go boom. And then to find the best ones this month, you can sort them by the month. So you can go to the month. You're still on setup mode, but you can say who's up the most this month. I want to look at those guys. Or who's up the most this quarter or this year. I want to look at those guys. IonQ. Yeah, so IonQ is from our weekend vid. You're going to see, so we had the counter of a shooter week. The counter of a signal is also bullish when you have full time frame continuity. The month was green when this week broke down, I believe. Yeah, so the month was green. The week flipped green. The quarter was already green, so they started buying it here last week, 68.50. The rejection occurred below last week's lows. So if we wanted to be in here first, we have our 2 down, 2 up daily reversal to go play it. So you'd be long in here, and you'd have your first targets very tiny, but then you have further pivot targets higher. So you'd just be trailing it up on a daily if you're a daily guy. Now, if you have it from our weekend vid, it's a weekly signal. So it looks like this. So if you're interested in the light version of the scanner, it is at stratalerts.ai. I believe it's /scanner. So you can compare between the light and the standard version in here. It looks like, yeah, day, week, month, year. So they don't have the quarter in there. That might be a typo. But you can find all the same setups we're talking about. You just can't scan. You have a lot of things, so you could go through this yourself. But you don't have the sector statistics, so you don't get like the whole market view in that way. You can't go and scan historically. That's one thing we do that a lot of people don't, is I can go and scan setups from August to see, what I could have done on, 2 down and green days on Tuesday in August. So you can actually back test everything we're talking about through the scanner, because we can scan these inside days today, or we can go back. You can't do that with the light version. You can't save scans and scanner views, blah, blah, blah. So that's the light version. Still allows you to do everything you need to find setups and signals. You just have less information. Yeah, so you only get day and higher. So according to the website, I'm not sure if you get the year. I told them to include it, or the quarter, I mean, but you get day, week, month, year, which is more than enough. When you set stops, you want to do it on the underlying. Someone working a job. Yeah, if you're gonna scan for higher time frame setups, if you are on a job where like you can stop for like 3 minutes and do something and then go back to it, no problems. The algo I think is really useful. It's a lot of the signals in the algo will occur closer to New York Open, so ideally you need the time to sit there, the first 20 minutes of the day. But after that, you're good. And if you have a job or you're trying to get into trading, like we put all of our stuff out, we give out probably the most free stuff out of a lot of these spaces, just because it's easy to do. Like this weekly signal in IonQ, it's up 7%. We discussed this yesterday. So if we go in here, we'll see in the technology IonQ, there's a signal. And yes, we're tracking a lot of stuff, right? The reason we're tracking it is because we're trying to find the ones that are really going. So on a Monday, we don't have to be the guy that catches this, although we can. What matters is, the rest of the week, can we just keep buying it? Like we had signals that just didn't break today. John Deere inside week, we just don't trade it. Whatever. And you see if signals gap. Sometimes they go, sometimes they don't. TPG. See how it stayed red all morning? So we look at this. If we wanted to buy it, we would have had to try and time a signal here. Right? It didn't work. Then they get stuck in the middle and they never change that. So since we couldn't change that, they're not doing anything this week. They're selling this week to start. Shake Shack was a bullish one. We set up for tomorrow. So we got the daily signal for tomorrow if they're going to kick them in. We got a lot of inside days on our list. So a lot of things we just didn't have trades going. IonQ is one of the few. Meta. Yep, daily signal. Could occur with full time frame continuity. I think this might be the last one that I take. SYM. So you can see inside month signal, which broke at the beginning of the month. The quarter still 3-2 pivot machine gun, so this is still good. It's just going up. So you're gonna need to set up new signals. Now, when you have the month already going, right, you can take these slight lower lows, just go after them. You're gonna have to wait for more of those to set up though. All right, boys and girls, I think we're just going to call it here. It was a pretty good session. We went a little bit longer than I had expected by about an hour and 40 minutes longer than I expected. But that's all I've got for you guys tonight. So hopefully you guys enjoyed, and I'll see you guys in the nightly vid tonight where we outline some signals for tomorrow morning and see what's setting up and what's going to start the week. But that's all I've got. If you want any more from us, we said at the beginning, but if you go to stratalerts.ai, we have a lot of free stuff that you can get access to, such as our Discord, as well as newsletters and other updates that we can offer you. Just name and email, and you'll get all that stuff sent to your inbox. But that's all I've got, everyone. Have a good rest of your night. I'll see you guys later or bright and early in the morning. Peace.